Hello, everybody. In today's video, we have the special guest, my friend and crypto YouTuber Ijaz. And today we have a chance to talk about some macroeconomics condition, how it impacts crypto market. Thank you for joining us today. And maybe you could start with like some quick introduction, what your crypto journey is about, what you're mainly focusing on, and something like that.
No, first of all, Coingo, thank you so much for having me. I've been watching your progress on your channel and you're putting out some really good content. So pleasure to jump on and speak to your community. Yeah, so my name's Ijaz. My background in crypto is a little bit different to many other people. So I actually was heavily involved in traditional finance. Growing up, I just wanted to be that trader, that investment banker, hugely into equities. I traded for a big American investment bank. And at the time, I always saw crypto. Crypto was always one of those asset classes that were there. And I'll be honest, as traditional finance people, we didn't take it seriously, right? We didn't take it seriously. We were like, oh, it's just crypto on the side. So for many years, we kind of ignored it. And I remember the first time I kind of took crypto serious was back in the 2017, before the bull run. I was nibbling on crypto. I think Bitcoin was less than 2,500 at the time, right?
Oh,
And you
wow.
nibble on it, but you weren't taking it seriously. But then I remember I got thrown away by the turbulence. The turbulence from that market put me into a big loss. And I then thought, oh, I'm disillusioned with crypto. I'm not interested. And I went back with my normal currencies and my traditional finance stuff. And then obviously you come back into it a couple of years later and you're like, wow, crypto really is matured. So that was my journey. But more around online content. Why did I start posting online content? Was around, I saw this thing where a lot of my friends knew I was in traditional finance. They knew I did technical analysis. They knew I knew how to trade. And they constantly asked me to analyze crypto, but I wasn't making any content. So I'd often spend an hour on the phone with one of my friends telling them, this is how you do it. This is how you look at a EMA ribbon, or this is how you do a Fibonacci retracement. And I thought, hang on, might as well just post this online. But then when you go on YouTube, you're bombarded with a bunch of moon boys, right? A bunch of people who don't actually know what they're talking about, just sharing that, Bitcoin's going to go to 1 million. And I was like, this is insane. So what I always try to bring to the community is a bundle of realism, right? Some realistic price predictions with technicals plus fundamentals. And, you're not going to find some crazy price targets from me where it's like, oh, Bitcoin's going to go to 1 million tomorrow, even though we have a CPI reading, because you'll find that the majority of people in crypto are not even looking at the macro. So yeah, that was my background. I've always been just kind of a bit more of a safe pair of hands, kind of traditional finance, moving across into the crypto space as well.
Yeah, it's actually great. And you're also like very deep in trading, as I see, with all your like technical analysis stuff. Yeah,
Yeah.
and I'm really wondering about the macro condition and what do you think that the most important events during these months? Is it like CPI reading or is it like Ethereum merge? What is more like critical as you think for now? Just your ideas on this?
Really good question. Really good question. And I actually put out a Twitter poll asking, what do you think is the most important between the Ethereum merge and CPI? And it was neck and neck first. But for me, hands down, the most important event this month is not actually the Ethereum merge. In the short term, it's the CPI inflation, because the whole reason Bitcoin's been on this huge retracement is because the macro economy has been risk off. So until we get some substantial evidence that the CPI is improving, the Fed chairman, Jerome Powell, said he will not pivot. In other words, he will not start reducing his rate hikes until he sees CPI inflation turn down. So last month, we saw inflation come down for the first time, but we've not had 2 months of down for a very long time since this crisis started. So it'll be huge tomorrow if we can get a CPI reading of 8.1% or below. I really think the markets will take to that positively and we can get some really good green, not just on the short term, but this could set us up for the medium long term. Now, that's not me like disregarding ETH 2.0. I think ETH 2.0 is going to be huge, but not in terms of this month. I think what ETH 2.0 does is a huge coup by the team to be able to transition from proof of work to proof of stake on a platform which has millions of transactions going through. I mean, that's really impressive. So I think for the long term, what Ethereum are doing is really, really good. I just think the CPI inflation is more important right now in terms of getting risk on to allow Bitcoin to start working its way back up. That's my take. What's your view?
Yeah, I'm just thinking that like September is surprisingly good because historically September is very like a bad month for crypto, and it seems like for now it's going going quite well. And like my personal opinion on Ethereum merge that something wrong should happen, like my like feeling more, and that will impact the like market very badly, because something should happen, because it's too too good for now. And you also see in this CPI data that it's going to be green. So, and it's something a bit like maybe makes me concerned that it's too good to be true.
Yeah, and I think I said this on the channel earlier today. I had an Ethereum trade. So my long-term portfolio, I hold Ethereum, right? I'm not selling it. It's there. I dollar cost average some more. But in terms of a short-term trade, if I was in, with my position now, I'm looking to exit leading before the merge. So for those who aren't as experienced with trading, when you have these kind of big events that everybody's looking forward to, like a hard fork, like a Coinbase listing, or like a big new feature upgrade, you get a lot of momentum in the lead up to it. But then when it actually happened, it's like an anticlimax, right? It's not very exciting, and everything calms down, and all the traders take their profits and leave. And then you sometimes see the price go sideways or down. So if you're trading on a short-term basis, you often want to try and make sure that when the music stops, you're out of the position, right? And then re-enter if you see some positive news coming thereafter. So that's the way I'm personally playing the merge from a trading perspective. Yeah.
Are you trading daily or like?
I used to trade all the time. Now, just due to time commitments, I mean, I have a bunch of other investments outside of crypto as well. Like I struggle to trade, but I do trade like just out of the fun of trading. So if I see a beautiful trade set up and I've got some time to trade it, I would trade it. But I think what
market, right?
Yeah, I just love it, right? Like I've been trading since I was like 14, 13, stocks and pennies. I remember my first stock market account. I had to get my dad to sign up to the brokerage because I was too young, right? And I just used the account to trade. Nowadays, I always laugh because if I was a 14-year-old kid now, like in school, you just download like Bybit or BitGet and you just start trading cryptocurrencies. Like so much fun for these kids now. But yeah, I remember back then it was really difficult to set up a stockbroking account.
Do you have any group like to follow for your trading like things?
Yeah, so we do. I do have a free Telegram, which everybody is welcome to join. I do post some insights in there. But we also have our we have like a members live stream where if you're a member of our community, we like have 3 times weekly live streams. And it's quite cool because what we do there is it's just a small community of us, and we get together. We'll go through some tokenomics of certain projects. I'll show them how I do fundamental analysis. We'll critique each other's portfolios. So somebody can share, this is my portfolio. What do you think? I'll be like, yeah, that's great, but it's a bit risky. You need a bit more Bitcoin or Ethereum. And, it's good to kind of sometimes in crypto, it's quite a lonely place, right? And it's sometimes good to kind of speak to others and share, what are you doing and what would their input be on what you're doing as well? Because you can just get caught in this silo where everything you think is right, but then you're missing something so obvious.
Yeah. But I think in general, the community is very friendly and open. Like I meet a lot of people, and also because of my channel.
Yeah.
Talking about like long-term investments, what are the project you're like bullish on like the most? Maybe you could feel comfortable to share like your top 5 projects. Maybe it's like blockchains or something.
Yeah, so I'm a relatively boring investor, I'd say. Like, so if you were sitting me down and saying, what's my portfolio? I will always start with Bitcoin, right? I'd make sure that you've got the anchors of your portfolio in terms of Bitcoin, then a good chunk in Ethereum, and then I'd work through the top layer 1 solution. So I know it sounds boring. I know some of them have their failings, but I'd still be working through the likes of Solana. I know they have plenty of downtime and issues. BNB, again, very boring, right? Cardano, many people complain about it, but I go through them because you want to have some of these big market cap projects. When the market's very, very volatile, they're the ones that are going to help you. And then you can balance that out with the more exciting ones. And the exciting ones that we like to talk about on the channel are things like Phantom, hugely undervalued, right? Things like Near Protocol, less undervalued, but more exciting in terms of tech, right? So definitely for me right now, particularly being in this type of bear market, my focus is on layer 1 solutions. I genuinely believe that when this market recovers, the battle and the money is going to flow into all these layer 1 solutions, because we don't have an ecosystem without these good layer 1 solutions. All the other projects are going to be built on top of that, right? So, that's where my focus is right now, is making sure I've got good allocations in my portfolio to all my favorite layer 1 solutions.
Yeah, I personally think that it makes sense to put like 60-70% in Bitcoin and Ethereum, like 30% in those, like, let's say, layer 1 solutions, like Near Protocol. And I'm not investor for Phantom, but like projects like that, and the rest, like 10, maximum 15% in some like small, low cap, tiny projects, which could potentially go crazy. And what about Cosmos? Because like me personally, and I'm very confident in Cosmos for the future bull run. Do you have any like ideas?
Yeah. Yeah, I made a really good video on the channel, Cosmos versus Polkadot. I believe both of these plays are really, really strong. I like what they're doing. They're very strong in the layer zero space, and definitely they would be part of my portfolio. And I do DCA into those two. I'm a little bit disappointed with Polkadot. I mean, they've done really well at the end of last year in terms of getting to the auctions and launching their parachains, and then it kind of just fizzled out. So that's what I'm watching to see. Okay, what's going on? And again, Cosmos, they've got a lot more to do, right? And they've benefited somewhat from some of the Luna collapse and some of the DApp developers moving across to directly to the Cosmos space.
Juno
again,
network,
sorry.
Yeah, most of them moved to Juno network, like part of Cosmos. One of everyone.
Yeah, so those projects are very good projects. You cannot, and even Avalanche is a layer one solution, very solid project. So yeah, I just keep it quite sensible, really, in terms of portfolio. A lot of people want to do, smaller market cap projects. I have nothing against that. I think it depends on your risk tolerance and it depends on what you're trying to gain from crypto, right? For me, the number one rule is preservation of wealth, right? And if you've got below a certain amount, then you don't mind if you risk that money. Right? If you're starting with a really small amount, you want to take higher risks. I understand that. So who am I to tell somebody don't invest in Luna or Luna Classic or Shiba or SafeMoon? If you're doing it and you're comfortable with the risk reward, then that's your choice, right? Everybody's an adult. Everybody can make their own decisions. But what we need to try to do as a community, using our channels, is to try educate to help people understand what is the risk to reward. Because there's so many people who come into crypto. I remember this, like they're coming into, let's say, Shiba or even today with Luna Classic, and they think because of a headline that it can get to $1, right? And when all I'm saying is it's fine. If you think it can go to $1, that's good, and you have that conviction. But can you explain to me the maths behind it? Right? Can you explain to me what would the market cap need to be? Do you understand that for Luna Classic to be $1, you're looking at a 6 trillion market cap, which is 6 times or 5 times the highest that Bitcoin's been, right? And I understand you have a 1.2% tax, but even if that 1.2% tax goes through, do you understand that the majority of transactions happens on chain? On centralized exchanges, and therefore what impact does that have? So I'm all happy being bullish behind these projects, and I really hope a project like Terra Classic really goes crazy. I really want Luna Classic to go crazy because I'm really annoyed with what Dokon did, and I've been very public on my channel about it. But at the same time, I don't want people who are new to crypto to come in with these crazy expectations, put their life savings in a project without understanding what it could actually mean, right? And that's very different to somebody who comes in, knows, and this is what the smart traders are doing. I know because I worked in traditional finance. They take advantage of the individual investor who doesn't know what they're doing. So they'll wait for you, waiting for the price to go up, and they'll be shorting you from the top, right? So you've got to be very, very careful.
And it's okay if like some coins is not like your type of investment, but some of the people are very like interested in some Terra, like Classic and everything. And I'm curious about mass adoption. When do you think that's going to happen? Is it like 2-3 years or 5 years? Like when like everyone will have crypto wallets in their iPhones? What do you think? Because for me, it's maybe like 2-3 years, and then it will be like very quickly happen. But maybe I'm too ambitious with this. I just want to have it to happen.
Yeah, look, we all do, right? We all want that mass adoption to happen. And in the absence of the mass adoption, it's a great opportunity for us to accumulate, right? Because once it does happen, like you said, it'll happen very quickly. But it's like a child with a lot of resistance, right? And that resistance are the governments, the establishments, the institutions, what we call the incumbents. The people who are benefiting from fiat currency will not want to let go easily. But eventually, technology always prevails. And if you look at an example of Uber, right? Nobody thought Uber was going to destroy the taxi companies across the globe. I know here in London, it was a big problem. London taxis are really famous, right? There was no way they were going to let this American company come and take over with everybody using these apps to dial Ubers. But eventually it works. And eventually these governments and these institutions don't have a choice but to adopt it, whether forcefully or through their own methodology. So I think mass adoption is still a little bit away. I think sometimes because we're in crypto a lot, we feel like it's nearly there. So sometimes I remind myself by just going into the public and asking people questions, they're not there yet. And I know from speaking to my family, my friends, my acquaintances, not a lot of them are actually actively into crypto. I could even say like a small percentage of them have a crypto wallet, right? So it depends what circles you're in. But we got a long way to go, I think.
Yeah, I just thinking also because of like all fiat currencies crisis, and you're also doing like videos about the dollar index and everything. So like euro is like collapsing, dollar is collapsing, everything like it's disaster now.
But here's an interesting observation, right? So the majority of US dollars in circulation have been printed in the last couple of years.
Yes.
We know that record inflation is surging across even developed economies. But what are we still seeing? We're still seeing the dollar index climb. So in other words, what's going on is we're seeing cryptocurrencies continue to retrace, which is a risk-off behavior, and we're seeing the dollar index rise. So what the market is saying is that yes, fiat currencies are suffering, but the dollar is still showing relative strength compared to those. So in absolute terms, all the fiat currencies are getting worse, but people are still flocking to the dollar because it's better than their third world currencies or whatever they're using, whether it's the rupee, whether it's a pesos, whatever they're using, they still want to go into the dollar. So, it's an interesting space because currently Bitcoin hasn't got the usability where we're the next best alternative just yet. If we were, we would have benefited from this. We wouldn't have retraced. We would have had a really good last couple of years as inflation was surging. But as you can see, that narrative of Bitcoin being an inflation hedge isn't quite playing out just yet. But I think it will with time over the long run.
Yeah, and I'm also curious, what do you think, like what percent of your portfolio you are feeling comfortable to have in crypto, and like the rest is like outside stocks and everything? Like, what do you think, like for you is the best percent?
Very good question. So my general rule of thumb, if somebody's never touched crypto before, I always say to them, guys, just practice with 1% of your portfolio, right? Just practice with 1% and get a feeling. And all the best way to think about it, I think Chamath said it on one of the interviews, was think of it like schmuck insurance, right? If everything went to pot, if traditional finance, real estate, stocks, everything goes in the bin, at least that 1% of crypto will grow to something. It's the opposite, right? So it's your hedge against that. Now, what I then do is I say, okay, once you're comfortable with 1%, why not work towards 5% if you have conviction in that asset class? And that's pretty much there where you are. I'm obviously more than that. Not more than you'd probably expect. And the reason for that is I've got a lot of my net worth in software companies and things like that, which is why, it's not as crazy as you probably think for somebody who's so heavily into crypto. But I think that general, 5 to 10% is a good amount for somebody who's not in crypto all the time to say, yeah, I'm in crypto, I've got good diversification, and within there, I'm split smartly between Bitcoin, Ethereum, good layer 1 solutions, a few layer 2s, like you said, some layer 0 solutions as well. And what a great position to be in. But here's the catch. If every millionaire wanted to get into Bitcoin and do exactly that, even if they wanted to put just 1%, so if every billionaire in the world goes, I just want to put 1% of my net worth into crypto, not because I believe in it, but because I can't afford to be wrong. If they just go, it makes no difference to me, 1% of my portfolio I'll put into Bitcoin, the price of Bitcoin will go crazy.
Yeah.
Right? And this is what people don't realize. I did a video on the channel, is it too late for crypto? I put that video up. And in that video, I go through some diagrams of sharing, what if a small percent of the real estate market comes into crypto, what would happen? What if a small percent of the equity market came into crypto? What if a small percent of the government bonds came into crypto? What if a small percent of even how much is spent on renewable energy goes into crypto? You see how crazy crypto could explode. Like, we are so early in terms of that S curve of adoption that we don't realize how lucky we are to be this early.
It's still early, and it will be like a couple of zeros for each crypto, I think. And more times more people are joining the crypto space, and maybe you could also give some suggestions for the new investors coming into crypto space. What the main rules they should follow, not avoid some risks, buying Shiba Inu for 100% of their portfolio and something like that.
Yeah, good question. Really good question. And again, one of the reasons I started making content. So if
First,
you're somebody
follow your channel.
Oh yeah, of course, and yours, of course. And I guess that's the interesting point. The point is to educate yourself, right? If you're going new into anything, you've got to build your level of education. Now, if you came in through Shiba or SafeMoon or Luna Classic, that's nothing wrong with that, right? It's great that you found a cryptocurrency that you wanted to invest in. But what's important is to now go through that. Once you've gone through that process, start learning all the key bits of crypto. So what is fundamental analysis? What is technical analysis? When do I need to use it? Why is it important, right? Start asking these questions, and basic searches of YouTube will help you find the answers to these. And then the key difference, which I think is the most important one, which my mentor taught me, is never let yourself become confused between the difference between an investor and a trader. What are you? And you can be both, it's fine. But when you're investing, you invest. And when you trade, you trade. Because here's what happens. I've done this many times and it's embarrassing, but I'm going to share it anyway. So let's say I go into a trade on Bitcoin and I think I'm going to go into this trade and I take a long position and the market reverses and it goes down. So many times I've done this where I've gone, yeah, I'm just going to hold the Bitcoin anyway. Instead of taking my stop loss and selling the Bitcoin, I'm just like, I'm going to hold it anyway. I love Bitcoin. No, that's really wrong, right? Because that's a trading position. And if you're trading, you have a stop loss, you have a take profit, you have a pattern which you're following, you have a reason why you're taking the trade. And if you miss, you miss, right? But if you're investing, it's completely different. What's your long-term objectives? What's your portfolio allocation? Why are you buying this crypto? Do you have conviction, right? If it's going to retrace 60% from here today, are you going to panic sell? Because if you are, maybe you have too much invested. So you need to go through all of this to understand, okay, what is a trader? What is the mentality of a trader? And what's the mentality of an investor? And keep those separate. Always keep those separate.
Yeah, people makes a lot of like emotional decisions while like it's the price going down, and it's the most critical things with those like psychology stuff, for my opinion. And also people should feel how much they want to like invest, and so don't panic, like accept the loss of this money, because if it's like a lot of their money they want to like buy something like in 1 month, yes, they will definitely lose their money.
This is ultimately the big. I mean, again, I made a video on this, which was like what most YouTubers aren't telling you on crypto, because the majority of people who are successful in crypto, the thing they've figured out is they've already got cash flow. They've got cash flow. They have income coming in monthly, and they can invest in crypto without needing that money. Now, if you're not in that position yet, and you're having to put your rent money in crypto, that's very different to somebody who's putting the same amount of money as you, but they don't need that money. They don't panic sell, right? They can dollar cost average and buy some more. They use it. Their mind is not cluttered. It's free. They can make clear decisions. Whereas you're so nervous because you're like, I need to take the profits. I need to pay my rent. That is a burden on you. So it's really important, as you said there, like whatever you're trading crypto, investing crypto, it's what you can afford, right? It's okay if it's a little bit, but what is it you can afford that's above your living expenses that you can just tuck away a little bit each month, and slowly that will build, right? You don't need to be in a rush. Just slowly that can build.
Yeah, like it seems that rich people becoming even more rich, and people who are not good with like money, they just gambling, and in the end like they lose everything, and saying that crypto is scam in general. Yeah, so
exactly. And here's the funny thing. I said this before to someone. Everybody's looking for that big, 2000x. But what's really needed, you just need 3 clean 10x's. If you had 3 clean 10x's, that would change most people's lives, right? If you went from 1,000 to 10,000, that's 1 10x. 10,000 to 100,000, that's 1 10x. 10,000, you're a millionaire in 3 10x's. But nobody thinks about that. Every coin is 10xing all the time. You see a 10x in a bull run, right? But nobody's looking for that. They want Shiba to go do a 2,000, 3,000x. That's what they want to see, right? And the problem here is this. As soon as you find the 2,000, 3,000x, guess what happens? You never invest anything. You don't invest big amounts in it because you never had conviction in it. So I know so many people that come up to you and say, oh, I was invested in Shiba. I'm like, oh, so you must be retired then. No, I put 50 quid in it, right? I put $50 in it. So it's like, and that's bound to happen because who's going to put $10,000 or any meaningful amount into a project which they have no conviction in? They won't, right? And that's the fallacy.
Yeah, and if you already see 15x, for example, it's very hard not to sell when you see already this result. Maybe like, and you will not waiting for 1000x. I mean, it's the best idea is to like sell using like part of your like portfolio for this crypto, like 20%. But it's easy like in theory, but when you really see this money and how it's like changes, it's like emotionally very hard to do like as well. So it's
You make such a good point. Psychology and emotions are so underrated in investing and trading. Like, I'd say it's arguably the most important thing, because everybody can learn technical analysis, everybody can spend some time doing fundamentals, but managing your psychology is what's the hardest thing. Like I said to you, when I started in crypto, I failed, right? I was in early in the 2017 bull run, and the turbulence threw me out of the market. And guess what? I wanted to blame everything else but me. I blamed crypto. I said, this is a rubbish. It's a scam. It's this, it's this. I'm like everybody else. But then I realized, no, there's nothing wrong with the asset class. It's you. It's your methodology. It's your emotions. It's managing your psychology, right? Why did you not take profits, right? Why did you not trim some profits at the top? Why is it when it dips, why do you panic sell? Why do you need the market to give you conviction? It's just red candles on a chart. Why do you need green candles on a chart to tell you that you invested well, right? No, you don't. Do you, like, when you invest in a great company like Facebook or Uber or Amazon, do you need the green candles to tell you did a great job? No. You go look at what they're building. You go look at the deliveries they're doing. You look at the iPhones they're making. You look at the products, and you're like, this is amazing. But when it comes to Bitcoin, everybody's looking at the price chart. They're not looking at the on-chain metrics. They're not looking at the hash rate. They're not looking at the computational power of the network and looking at how over 12 years they've made such good progress. And that's where we fail, because we start looking at the chart. And here's another example. Like, I give a crazy another. I can't remember who I said this to. It's a really good example. So imagine you own a house, right? And you bought this house for, let's say, $1 million. And outside your house, there's a man who's standing there with a sign. And on the sign, every single minute, he shouts out the value of your house. Like, every minute he goes, your house is now worth 900,000. Your house is now worth 1.1. Your house is now worth 800,000. It would drive you crazy, right? But we don't do that. We know our house, we buy the house, we make utility of it, and eventually if it goes up in value, great, we'll sell the real estate. But with Bitcoin, we have access to these charts, and that can, if you don't control your emotions, make you do really silly things. I know so many people that have just panic sold in the middle of the night because they wake up 2 a.m., they see a big red candlestick, and they're not in their senses, they panic sell, right? And that's the thing with crypto. You've got to be able to manage that.
Yeah, and like you're started in the beginning of 2017, which is not like the worst. And if you're starting like on the peak, like end of 2017 or November last year, and then you see like some of the coins going minus 90, like 6% or almost 100%, like majority of the people never came back after this, but like for now, like it's the best time to buy, but they already left because they was like back in November, and they will probably coming back to crypto space like in 1 or 2 years in another bull run. That is the most like
and that's the circle of it. You're absolutely right. That's exactly what I did. I felt disillusioned with it, and I had to come back, and I come in at a higher price, right? You pay the price for the conviction that you do and for the research that you do. I think, as Michael Saylor says, everybody will buy Bitcoin at the price they deserve. And we're seeing that, like, loads of people were buying in November at 69,000. That was the most adoption we had in Bitcoin. So many people were talking about Bitcoin. Like, every office you would go to, everybody's talking about it. Your Uber driver's talking about it. The person in the chicken shop is talking about it. Everybody was talking about crypto. Now they're not talking about it, right? So now is the time when we need to get to work. And that's why I always remind our community is when fear is high in the market, we need to get to work. When it's greedy, like it was in November, all the long-term holders were selling at that point in November. If you look at the on-chain metrics, they were selling. New people were coming into the market. Now what is happening? The new people who came in at 69, they are now selling, and the long-term holders are buying it cheap at 20,000, right? So that's the circle of Bitcoin.
Yeah, and to be honest, when Ethereum was 900, I had some money to invest, and I wanted to invest, but I was scared in seeing like this 900 for Ethereum that I didn't do it because it was like too scary for me.
Yeah, and the reason that is like a lot of people who are new to crypto, they think crypto is binary. So what I mean by that is they think that at this price they have to buy. At this exact price, if Bitcoin is 40,000, I have to buy. If Bitcoin is at 19,000, I sell. Like, it doesn't work like that. You have to look at it as ranges. You're not, like you mentioned Ethereum at 900. Maybe people at the time when it was 900 were like, oh, Ethereum's going to go to 500. It's going to collapse, right? But if you look at it and you ask yourself a simple question, is $900 Ethereum a good value or not? You can make that decision.
Yeah,
right?
My feeling was like I'm continue to invest in this year, but it's just everything is like decreasing in value, and if I like make this another investment, it will do the same. It's like doesn't make any sense. It was, I mean, I understand that it's not correct, but at this specific time it was like such feeling for me.
Yeah, no, and that's why that's the hardest part of crypto, is that conviction. Because when crypto is down, everybody will think it's going to go more down. When crypto is very high, everybody thinks it goes more high. So I always use that as a gauge. If everybody's telling me it's going to go more, go higher,
Time to
you know
sell.
you're going to, yeah, exactly. It's time to trim some profits, just a little bit, leave some and trim some as well.
Yeah, it's like a lot of about psychology and everything. Yeah.
But
So,
also, like, it's not all or nothing. It's not, oh, I'm buying all my portfolio in crypto, then I'm selling everything. I just trim a little bit, and then when the price is low, I'll just buy a little bit more. Right? So I, on my channel, I say nibble. I just nibble. I just buy a little bit, like a little rat just eating. I just nibble some more at prices. I don't have to go, if I've got $10,000 to put in the market, I don't go, oh, when Bitcoin's going to hit this price, I'm going to put 10,000. No, I split it into chunks of 1,000. I go, okay, I nibble some there. Oh, look, the price is there. Nibble some more. Oh, look, we're going back up. I'll still nibble. Oh, we'll come back down. I'll nibble. I just keep nibbling. And same when you're taking profits. I just nibble. I trim it out. I trim a little bit. Oh, Bitcoin's hit 60,000. I'll take a little bit off the table. Oh, we hit 70,000. I'll take a little bit more off the table and put it into some altcoins or put it back into Ethereum or something else.
yeah, I honestly think that more people should like watch your videos and follow your like strategies and ideas, because it's like some general like, and maybe like, let's say, basics of understanding like of all those investment rules. Doesn't matter, is it like stock market or crypto market, because it's the most important things. It's not specific coins, it's just about of your thoughts, ideas, how you think, and the way how you think.
And here's the beautiful thing. Once you've mastered those skills, then it doesn't matter what the market does. You're comfortable. Like your emotions are like, it's just very steady. Like this bear market for me, obviously I've had the experience of going through a few now, but I've been very calm. Like I've been very calm, posting content, doing my dollar cost averaging. Even now, as we sit here today, it makes no difference to my life right now if Bitcoin goes to 15,000 or if it goes to 30 by tomorrow, right? It makes no difference to me. Like I'm annoyed and happy either way. Right? If we go down, I'm like, oh, my portfolio is a bit more in the red, but I'll dollar cost average some more. If we go up to 30, I'll be like, oh, I wish it was lower so I could buy some more. Right? So either way, you just learn that, there's always something to do. Just be prepared for whichever situation. And anybody telling you they know where it's going, they're just lying. Right? I always say to the community, be prepared for either direction and have a game plan for either direction.
Yeah, true. And like crypto is addiction, once you start in crypto, you will never like.
Absolutely.
Like, yeah, it was really a pleasure talking to you today. I learned a lot during the call. I will check like much more your videos. Like, yeah.
No, I'd love to. Let's do it again sometime, Crypto Girl. Thank you so much.
Yeah, thank you so much. Yeah, have a good
Take care.
Bye-bye.